Hello viewers, we'll be going over WTI crude oil. In this video, we'll be going over the day-by-day probability model, the technical performance of each model, how we find the models, comparing the current trend with the trend in the past, and we'll go over the day-by-day forecast for WTI crude oil. So back to the technical analysis, we're currently down 24 basis points, and on the 1-hour chart, what we have here is we're approaching to negative MACD. However, we see a slight convergence, and at the moment for the 4-hour chart, what we have here is we still see sideways action for the 4-hour MACD, and we were about to diverge. However, we since reversed and bounced right off the 18 moving average, this purple line. As for the daily chart, what we have here is we start to see a slight convergence on the daily MACD, and we approach near overbought RSI, and we have a pretty good chance of it reaching the 200-day moving average, and that will act as our immediate support, and that is around the price of $43.97. So that will be our first immediate resistance to the upside. As for support, if we do reverse and head down lower, the next possible support will be around the price of $39.30. and that coincides with previous support levels that date back to July 10th, and that also coincides with the 50-day moving average as it approached during time. And if we do manage to climb higher, that price movement to the upside is roughly around, say, 4.3% to upside to hit resistance, and to reverse to hit the support, that is around 6%. Now let's examine the day-by-day probability model. These models are available in the link below, so do check it out. As we progress to the 5th day or a week of trading, we have a 53% chance for it to climb between 0 to 4%, and to the downside we have a 40% chance for it to fall between 0 to negative 4%, and on the extreme case to the downside, a 7% for it to fall between negative 4% to negative 8.5%. So now let's examine the day-by-day forecast for WTI crude oil. So what we have here is 1 day out, that will be a Thursday, and 2 days out will be a Friday, and so on. So we have 3 days out, 4 days out, 5 days out. Which one of these models we should focus on? Ideally, the model that is best matched to the current trend. The blue lines are current trend, and the line overlapping it happens to be the best match. So right here we have our current trend, and the trend below is the line that we found on the line graph above, and this trend dates back to June 16, 2017 to July 31st, 2017. So let's begin comparing both of the trends. So on the current trend, we averaged above the middle Bollinger Band and ended up at the upper Bollinger Band. And in the trend below, we started off at the upper middle Bollinger Band and then ended at the upper Bollinger Band. So what we have here is 1, 2, 3, 4, 5 points. And on the trend and current trend, we have also 1, 2, 3, 4, 5 points. So there's reason to believe that the trends and patterns are somewhat the same. The outcome and forecast should be fairly the same. So the model that we just examined was, again, June, if we can find it, June 16 to July 31st, 2017. WTI crude oil was down roughly around, say, 1.3%. If we head back to the day-by-day probability model, that coincides with this standard deviation of 40% chance for it to fall between 0 to negative 4% in the next coming days. If we examine closer on the technical performance of each trend, on the current trend, we're 0% away from monthly high, up 12% from monthly low, up 2.2% from 10 simple moving average, and up 3.6% from 20-day simple moving average. We don't have 50-day simple moving average because we're only examining a 30-day trend. Compare that to the trend in the past that we just found. Back then it was 0% away from monthly high, up 13% from monthly low, up 4% from 10 simple moving average, and up 5.9% from 20-day simple moving average. So among the two trends, there are technical similarities, and these models are available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.